Good morning, members of the board. My name is Manith, and we are the team members of External Consultant. And today we'll be presenting a key issues recently reported in the media and how it's connected to the Australian accounting systems. To start with a brief background, Tesla is a global company based in the United States and is well known for its electric vehicle, energy storage system, and clean energy products. As of May 2025, Tesla have a market value around $900 billion, making it one of the most valued car makers in the world. The company is popular for its well-known models such as Tesla Model 3 and Model Y, and its use of software features like autopilot and remote updates. In Australia, Tesla has gained a very strong interest, especially among those early investors of electric vehicles. As you can see in this chart, Tesla holds a dominant position in electric vehicle market shares, which nearly half of the total market shares, while others major manufacturers like Ford hold a very small major share.
Hi, I'm Matilda, and today we will be discussing recent concerns from Tesla's customers. Tesla users are describing their driving experiences as unsettling and terrifying. Customers are concerned about the company's lack of roadside assistance, customer support, and the inability to honour warranties. One customer has reported that despite his vehicle being under warranty, he has had to pay upfront for new tyres, towing, and travel. Whilst Tesla has promised to reimburse him $2,500 for towing, he has not yet received this money. As stories like this continue to gain traction in the media, and with the company's 13% drop in sales in 2025 alone, their worst sales record in 3 years, external stakeholders' concerns regarding the company's reputation are growing. Stakeholders will be keeping a close eye on the company as customers continue to take action.
My name is Gemma, and I'm now going to be discussing the accounting treatment of this event and how Tesla will account for this event in accordance with AASB 137, provisions, contingent liabilities, and contingent assets. So to start off with, we're going to look at paragraph 10, some definitions. First of all, a liability is a present obligation as a result of past events that will result in a probable future economic outflow. Next, a provision is a liability but with an uncertain timing or amount. Next, we'll talk about what an obligating event is. So an obligating event creates an obligation of the entity to give up future economic resources. There's two different types of obligating events. First is legal. These are usually the result of a contract or some other form of law. And the next is constructive. So these are resulting from the company saying that they're going to take responsibility for something, or their prior actions creates the obligation. Then finally, a contingent liability is a possible obligation that will only be confirmed with the occurrence or non-occurrence of an event. So our position that we have taken is that Tesla is going to recognise a provision, and we'll now go through why we believe that to be the case. Okay, so under the recognition criteria in paragraph 14, a provision will be recognised if there's a present obligation of the entity, if there's a probable outflow of resources from that obligation, and if the outflow of resources can be reliably estimated. We're going to follow a decision tree as outlined in AASB 137 in Appendix B. To start off with, we here look at the present obligation as a result of an obligating event. Under paragraph 17, the sale of the vehicle we have deemed as the obligating event because when they sold the vehicle, they sold it with warranty and therefore are obligated to provide a warranty to the customer. So therefore, this answer here is yes. Next, we move down to probable outflow. So warranties are considered a class of obligations as a whole. It's unlikely that Tesla will have to provide the warranty for every single customer, but as a whole, it's extremely likely they'll have to at least provide warranty for one or however many customers. So therefore, we've deemed that yes, there is a probable outflow for Tesla. Then next, can it be reliably estimated? Under paragraph 25, Tesla must be able to determine a range of possible outcomes. They can actually reliably estimate it really easily because they know in their contracts exactly how much they've given to the customers to allow for warranty, the warranty lasting 4 years or 80,000 kilometers. So yes, it can be reliably estimated, and therefore we've said that a provision does exist and they must provide for that in their financial statements. Now that we have decided that Tesla will recognise a provision, we now have to look at the measurement of that provision. So that is defined here under paragraph 36. and they define it as the best estimate of the possible expenditure. So in the case of Tesla, given that it's such a large population of items that they sell so many cars, they can estimate it using the expected value method. So what this means is that they multiply the weights of the likelihood of them actually having to pay out the warranty based on the amount of the warranty to therefore come up with the amount that they should account for in their financial statements.
Hi, I'm Demi and I'm going to be discussing the outcome. So because it's a provision, we're going to have to recognise a journal entry, and it's going to be a debit to the warranty expense and a credit to the provision for warranty. And this will increase the expense and reduce the net profit, and then crediting the provision increases the liability and shows that they owe something.
Since it has been determined that Tesla will be recognising a provision and they're able to measure it, we will now be talking about how they will disclose of it in their financial statements. So according to AASB 137, paragraph 84, in the disclosure, they will have to disclose the carrying amounts of the provision at the beginning and end of the period. They will also have to discuss any additional provisions made during the period, for example, if they sell additional cars and therefore have to issue additional warranties. Next, they'll have to disclose any amounts used during the period. So this could mean if they actually have to pay out some of their warranties. They will also have to disclose a brief description of the warranties in the notes to the financial statements so that external stakeholders can see what the provisions are for. So this will be a description saying that they are for the warranties on the cars. And then finally, they'll have to disclose any uncertainties in the timing or the amounts of the provisions. This will come about because the warranties are in effect for 4 years, so there's uncertainty of when they may have to pay out that money.
Walker stated that Tesla were going to reimburse the $2,500 for towing, but they've failed to do so. And this may be considered material to Tesla's financial statements, especially if other customers have experienced similar issues. By failing to recognise the provision and the expense can overstate the profit and then be misleading to investors.
In conclusion, there are some challenges faced by Tesla, such as high purchase price, customer service, and software faults, which are likely to impact both on customer satisfaction and also Tesla financial standing. According to AASB 137, Tesla should recognize provision as these represent a present obligation arising from past events. The company have a legal duty to fix any faults under a warranty claim, and it is probable that costs will arise from necessary repairs. And the recognition of provision help Tesla financial statement to be accurately reflects on its liability and also the obligation providing stockholders such as investors to access with necessary information about the company financial health. And that's all for today. Thank you for listening.